Hi folks, in today's video we are going to go through my investing accounts with Vanguard and Trading 212, get everybody up to date for February 2021. Frugal February is on the way, got plenty of content lined up to do with money saving, money making, got a good interview coming up this month as well. We're going to be covering a lot of ground on how you can up your income, get in those extra pennies, save those pennies, get them invested and get you closer to your financial goals. So make sure you stay tuned for that. But first things first, start of February, let's do an update. Of course, I'm David from prettypenny.club. I make videos to help you reach your financial goals with content on investing, frugal living, passive income, generally trying to make your money work harder for you. Subscribe if that sounds good to you. So it has been a crazy week in the world of stocks and shares. AMC, GameStop, all these other sorts of characters, all getting the short squeeze put on them by the guys over at Wall Street Bets, among others. It's a pretty interesting story unfolding there, but I, for one, am glad I'm not involved really in any of it. An awful lot of it seems to have gotten a little bit out of hand, and I think probably at the end of it we're going to see an awful lot of people out of pocket. But look, that's the way it goes. We all want the free market, so everybody is entitled to act freely. If, of course, there aren't other factors working against you. So depending on what side of the coin you fall down on here, it's really a bit of a free-for-all at the moment, and as I say, I am glad I'm not involved. You could be forgiven for thinking that the stock market is made up of entirely two companies these days, AMC and GameStop, but I'm pleased to tell you that it is not, and we're going to have a good look through my portfolio this month to see exactly how my stocks and shares are doing. We've got lots of nice opportunities for index investing as well in this day and age, and that's where we're going to start with today's update in my Vanguard account. Let's just head there right now. Okay, so here we are in my Vanguard account, currently worth £14,295.77. So there's a couple of things I want to highlight in Vanguard this time. The first is that there's none of my investments in Vanguard that are actually exclusive to Vanguard. So one thing that really appeals about Vanguard is that they run some excellent life strategy funds. But as you can see, I'm not actually using any of them. I have ETFs for emerging markets, all world high dividend yield, developed world, and the S&P 500. None of these ETFs are exclusive to Vanguard. You can actually buy all these funds on Trading 212. So that's the first thing I want to mention. I have been given some thought to clearing out my ISA from Vanguard, or at least opening a new ISA in Trading 212 in the next financial year. I'm moving all my investing underneath the one umbrella. It would be easier to manage and it would be easier to control in that respect. However, there's an awful lot of funny business going on with Trading 212, just with the way the markets are, and Trading 212 are telling us that there are so many people looking to onboard onto their platform that it is causing outages. So I would want to be sure that Trading 212 are up to snuff in terms of their capability to scale before I would think about ditching Vanguard. There is a platform fee for Vanguard of 0.15%. You pay that for the privilege of being on the platform, but they make up for it in many, many ways with the quality of service they offer, their reliability and their experience. So you can see I have 10% of my ISA is with the emerging markets, 10% with all world high dividend yield, and then the bulk of it, 80% or so, mixed up with the FTSE developed world and the S&P 500. And the reason I went for this was that the S&P 500 offers access to the biggest economy in the world, that is the United States, and the FTSE developed world here lets me track the developed world as a whole. So I get to cheer on the whole world while hoping to make a little bit of money out of it. So that's what I'm invested in. So you can see all of them are doing pretty well at this point in time. And these represent returns for these particular investments. I did used to have the life strategy funds, and they will have returned a little bit of money in their own right. But we only track the amounts of change for the investments that you have in play at this point in time. So if we go back to the overview here, and we see that the personal return is 12.1%, you can see that £1,000 thereabouts is not 12% of 14,000. So the way Vanguard worked this out, and it has been asked of me before, is that they use a weighted rate of return. It looks at when you deposited your money, how long that money's been working for you, what that money has made. It is not a flat return on investment. So imagine that you had £100 over a course of a year. That £100 doubles to £200. Then you could say your return of investment is 100%. So the very next day, if you deposit another £800 and you've now got £1,000 in total, well, you've still only made £100. So then to say that your return on investment is only 10%, I'm not sure would be right either. The figure that they use to come to this 12% is an incredibly complicated formula, and it very much depends on timing and all that kind of thing. I can't really give it an awful lot of thought, to be honest. I just want to see my graph looking like this over a long period of time, and this is only about a year we're looking at here, but over a period of time, I just want to see my investment grow. So I am very pleased with this. I mean, even through the March dip that we had, things have come back stronger. The market's looking good. Some might say it's looking too good, but consistent investing for me has seen this account grow from fairly small beginnings up to about £14,000 at the moment, and hopefully we can continue to keep it growing. I still believe, hand on heart, that index investing is the best way to grow significant wealth. Time in the market, consistency in the market, I think is the best way to grow in a sustainable fashion. And that's why I love investing with index funds. So that's it, 14,295 quid. Let's move to Trading 212. Instagram is up and going as well. We're posting every day, so if you're on Instagram and you'd like more content like this, make sure you get along there and give us a follow. Just before I get into the Trading 212 update, just remember that throughout January I was giving away all my referrals. For anybody who used my links below, all you had to do was be subscribed, leave a comment, like something. It was pretty simple, straightforward giveaway. So just scrolling through here, you can see all the different kinds of free shares that I was getting as we go down, and there's tons of them. So it's going to be a good giveaway. I haven't actually counted up exactly what is all in here. There's also shares from Stake, which was a good one, and a couple of free trade ones, although they haven't come through yet, but I'm going to roll them all up. I'm going to give them away as prizes, so that's pretty good for whoever gets some of that action. I'm not going to make a big announcement though. I'm going to be a little bit sneaky about it. In the next couple of videos, I'm going to announce maybe 3 winners. I think 3 winners is going to be good. And I'm just going to announce them somewhere in the video, so you're going to have to watch the video. If it's you, you're going to have 7 days to claim. So there's no announcements in this particular video, but there will be from the next one. Anyway, let's get on with the Trading 212 update. We can see in the overview, £6,910. Portfolio itself is worth £6,716. There's a bit of cash lying about in there. The finances are a wee bit up in the air. I'm not exactly sure how much of this money is mine and how much is prizes, because there's been so much going on in January that I haven't quite worked that out yet. For the sake of this update though, we're going to go with these figures, 6,910 quid. So we'll just start with a few things that I actually bought. Just a couple of days ago, I bought another share of Microsoft on the dip. I have really high hopes for Microsoft on a long-term play here, because especially what they're doing with cloud computing and all the facilities that they are making available online. I really think this is the way technology is going. Amazon for a similar sort of reason, but Microsoft and their Azure options are really flying. So I was quite happy to buy another share there. $235, £171 that cost me to get in with Microsoft for another share. What else? Oh my goodness, so many free shares. Okay, these look like mine. So I bought another 16.5 shares of the iShares electric vehicles ETF. Electric vehicles, they're coming folks, whether you like them or not. Petrol heads are probably not going to be happy with this sort of forecast, but the way the UK government in particular is pushing to get all the petrol and diesel engines off the road, electric vehicles are coming, and I want to try and get in good and early, and I'm really hoping to ride this wave for some time to come. My only concern about this ETF is it is very Tesla heavy, so if you're already invested in Tesla, or maybe you don't love Tesla so much, whatever happens to Tesla is going to have a serious bearing on this particular ETF. But I imagine this ETF might branch out as time goes by, when more and more qualified companies, if you like, come to the fore, and this ETF I suspect will become even more diversified. iShares Global Clean Energy ETF, I bought another 10 shares of this. Anybody who has watched this channel for any length of time will know how much I love clean energy. Again, folks, there's a real tailwind of momentum behind clean energy at the minute, and I'm hoping to continue to add more to this position, because I think it's going to be worth an absolute fortune in the future. I bought 5 more Coca-Cola shares on the dip. Half decent dividend. Coca-Cola are probably not going to be going anywhere for a while. It's a fairly solid company, a fairly solid choice, fairly stable share in the main. So £179.36 for 5 more shares of Coca-Cola. And that's it folks, that is all I bought this month. So dividends, not too bad this month. £5.61 from National Grid. I really like National Grid, although they're under a bit of scrutiny right now from the regulators, so I'll have to pay attention to the news coming in there. There's talk about breaking them up because they may have a conflict of interest further down the line, so we'll see how that goes. And another dividend from GlaxoSmithKline, which are a pretty solid dividend payer here in the UK. £6.46. So that's 11 quid odds dividends, and I also got a £3.14 dividend from the Renewable Infrastructures Group. So that took us up to and around 15 quid this month for dividends. Not too bad. Back into the investments, of course. No sales this month, with the exception of the free shares that I am now accumulating into a big ball of cash to give away. So you know what to do. Let's have a quick rundown what I've got. So Amazon have seen something of a bit of a resurgence. 0.4 shares here, 125 quid in front, 14 odd percent. That's one of my best performers. I'm really glad I got in when it did. Amazon are another one. I've talked about them tons of time. The fingers in every kind of pie you can imagine. They've got retail, they've got cloud, they're getting into space, they're getting into cars, they're getting into they're an absolute juggernaut, and depending on how you feel about them as a company, I think it's hard to argue against the case for Amazon as a business. Avast taking a bit of a hit. These are the cybersecurity guys. I'm not overly upset about 7.21% behind. I'm likely to try and add a few more shares at that price. Coca-Cola still slightly behind. I added to my position, as I said. GlaxoSmithKline a little bit behind. Still probably a bargain for somebody, but as you can see, I'm pretty balanced with my position GSK at the moment, so I'm not going to really make too many more moves there, I don't think, for the time being. Electric vehicles is looking good. Clean energy is looking good. Legal in general, surprisingly looking good. I like legal in general. I thought they'd have a shakier time of it, I have to say, with Brexit and all the rest, but that's probably still to come. Lloyd's as well, 17%, well, 18% behind there. It is what it is. You know, Lloyd's will face some headwinds, I'm sure, going forwards, but I'm happy to hold this position. And Luckin Coffee, from the ashes, look at that. 32 quid that's worth now. It's kind of unbelievable. I honestly thought they were dead, absolutely dead as a dodo in the summer there. I just couldn't see a way back for them, but fair play to them. They're going for it. Microsoft, love Microsoft, added a share, as I said. National Grid, plodding along, just die. Persimmon House Builders, still waiting for that big move from Boris to get the housing infrastructure and housing projects up and going. I'm quite happy to hold Persimmon, but I'm not probably going to add too much more at this point in time. Renewable infrastructures, I like. Decent dividend, invested in a range of renewable tech, so happy to hold those. Unilever, it's a bit of a staple on every UK investor's portfolio. I think they're doing alright. Half decent dividend coming out of these guys as well, and then Van Eck Vector Video Games ETF picking up the rear there, so very happy with that one. That's one I really think has still a long way to go. They have come in for a little bit of a dip in the past week or so. You can see the kind of progress they're making in that particular ETF. Pricey to get into right now. There's a lot of good companies in there, and you're probably going to have to pay that premium for good companies, but we'll see how that one goes. If there's a bit of a dip, I might well try to add to it. I'd be a little bit cautious adding to it at these particular prices. So the figures are a bit squiffy this month, as I've said, but let's try and have a look at what the return on investment is for this particular account. Little graphic on the left here tells me that there have been around £5,610 worth of deposits, £331 of free shares, but that's not including any from this month since I'm giving those all away. Dividends are now past the £100 mark, so that's nice. That's free money just for holding shares that I would have wanted anyway. So you can see that brings a paper value of this particular account to just shy of 1,300 quid and an ROI of somewhere in the region of 23%. Have to say I'm pretty pleased with that. Free shares are obviously playing a big part in that. Dividends are playing their part, but again, I'm trying to be as consistent as I can with this Trading 212 account in the same way that I'm doing with my Vanguard. So I'm now over £21,000 invested across these two accounts. Hopefully things continue to grow from here. As ever, there will be another update in March. If you want anything sooner than that, or you have any questions at all, just drop a comment down below. I try to answer every one of them that comes my way. I'd love to know what you think of my investment accounts. It's always good to try and keep learning from other people. So let me know your thoughts. I'm always interested to hear from fellow investors. Folks, thank you very much for watching. I will see you in the next one.